Super Bowl 52 is here. Can any of those awesome commercials in which everybody enjoys, can any of them be responsible for a potential market up move? This is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. We have a lot of things on our radar today. Obviously, the big one, of course, being Super Bowl 52, the plays, and how we could potentially take advantage of this. So we're going to start off with Wendy's and McDonald's, and there was a commercial which made my mouth water, but then I realized it was just fake news, and of course that was the new McDonald's hamburger, which is probably mathematically 17.2 times the size on the commercial as it is if you actually purchased it and held it in your hands. As somebody who has been a fan of the very disgusting Big Mac for a very long time, I looked at that commercial and I said, wow, that looks like one heck of a hamburger. And then Wendy's came out with a commercial. So McDonald's came out first saying, try our new bigger Big Mac. They should have called it a Bigger Mac, but they were a lot more creative than that. I forgot the exact name. And then Wendy's came out with a commercial and was just basically ripped apart McDonald's. They were basically said, all right, you want to know the difference between our burgers and McDonald's? McDonald's burgers are flash frozen. Well, if you're not familiar with the flash freeze process, they basically they try to freeze it immediately to try to retain its ingredients and its nutritional values, even though some is lost, obviously, through the freezing process because they're natural, for lack of a better word, microbes that die, microbes that you probably want to eat, believe it or not. The enzymes and whatever also getting destroyed through the flash freeze process. However, the majority of certain nutritional proteins are kept. This isn't a science class, but basically Wendy's came out and said, our burgers are fresh, never flash frozen. We also heard that the iceberg that sunk the Titanic was frozen. They just basically put this tremendous negative connotation around McDonald's. While McDonald's tried to say, try our bigger burger, Wendy's said, hey, try our burgers because McDonald's is disgusting. That's Wendy's 1, McDonald's 0. And I think you have to look at Wendy's, maybe even as a hedge play, like short McDonald's, long Wendy's. I think that's a very interesting way to approach this problem. To see if, you get some form of a movement or whatnot. But if you haven't looked, actually, the futures are down right now. We're actually plummeting. We are plummeting in the futures. The storm has passed, but the rain continues. And so we're going to go over a little bit of that. The storm has passed, but rain continues. And what do I mean by that? I mean all the big names reported. And if you're watching the Newsbeat Show, this doesn't surprise you. I said, look, guys, Apple could pull down the entire market. I said, watch it. This is going to be the reversal of the market. And I've been talking about it last week. I was talking about it the week before. All the Newsbeat shows are recorded. You could just simply go to T3 Live's Facebook page and type in the Newsbeat Show, or YouTube and just type in Newsbeat Show, and you could watch all the episodes. They're all publicly available. What am I saying with that? What I'm trying to say is let's look at what can happen from here on out. So, again, I watch some of these videos where it's like, I'd rather be wrong than give you both sides of a coin, because giving you both sides of a coin never helps. Well, if McDonald's can hold $159 here, we could head back up to $165, and if we can hold $159 here, we could go down to lower levels. Like, that's what I mean by telling you both sides of the coin. That is garbage in your ears. That is garbage in your ears, and unfortunately, the majority of things out there involved garbage in your ears. We had a phenomenal bottom call in Bitcoin. I'm still holding Bitcoin, things like that. So when you listen to this Newsbeat Show, I need you to understand I'll be right and I'll be wrong, but I'm never going to pull the CNBC analyst approach, where basically the analyst comes on TV and he's never wrong no matter what he says. You ever see that analyst? You know what I'm talking about? So I'm going to give you my full thoughts, right or wrong. Apple's going to drag down the market probably for a day or two. We're going to get a reversal next week, a big buying opportunity. Market down Tuesday or Wednesday. Tuesday or Wednesday, we're probably going to have a reversal to the upside in the market. This shouldn't have surprised anyone. We talked about how bad Apple's shape was. And then Apple gapped up on earnings, if you remember. And then by the time you walked in the next day, it was down and plummeting. We caught it to the short side. We actually also caught it to the long side, ironically, intraday. We actually traded both sides of the coin. Ladies and gentlemen, welcome to what I like to call a mini bear market, where it might not be a bear market in terms of definition. It might not be a bear market in terms of you looking at a certain chart or a certain, whatever you're looking at. It might not be a bear market in terms of that. But we are in a mini bear market, and it was predictable, and it's easily predictable, and Apple's going to drag us lower. And don't think the market's going to rally without Apple. I don't care what Amazon does. I don't care what Amazon says. I don't care how good their numbers look like. I don't care what the analysts say about Amazon. Let's stop making up the bull, the bull fecal matter here. All right? All of these are phenomenal companies. Apple's making billions upon billions upon billions. And I love that argument that people make when they're watching some of these names. Oh my God, Mark, Amazon, oh my God, this is just the greatest company ever. And I might agree with you. Or Apple's the greatest company ever. Google, or one of these big FANG names. Please don't say Facebook is the greatest company ever. But, maybe one of these FANG names are like, wow, like these companies are just amazing. And I agree with you. But you have to have a sense of realism. And our correct call in the market pulling in basically applied that sense of realism. So for example, Amazon gapped up. Believe it or not, we actually caught this one to the long side, or I did, a lot of people in the room did too. But here's the thing with Amazon. Yes, it's an amazing company, and I love the morons on Wall Street who give me this argument. I love these idiots on Wall Street who always give me the same exact talking point. The same exact talking point. Oh, well, Amazon is A, B, C, D, E, F, G. It's so great. Okay, why isn't it a $2,000 stock? Why not $2,500? Why not $5,000? They keep making money. I have no doubt they'll continue to do it for a long time. Why not a $5,000 company? Why not a $10,000 company? Since we're making up numbers here, why not just say that all these companies should be valued twice as much as where they're trading now? Why not? So when I come out and I tell these analysts and I talk to these imbeciles who just rode the most amazing wave in their entire history of existence, the arguments I receive back are unintelligible. Now, of course, we have a few of these hedge fund managers in our room, and these people happen to be a little more intelligent because they were buying the VIX. And I was telling you guys last week why they were buying the VIX. It was in one of the Newsbeat shows. Was it the last one? The one before? I honestly don't remember. It was one of the Newsbeat shows. And I'll tell you right now, they were buying the VIX because they're not allowed to sell Apple. They're not allowed to sell Amazon. And I told you why. If any of these big hedge funds sell out of any of the major Facebook, Apple, Amazon, Netflix, Googles, and it goes up, their job is at risk. You know that? If all these FANG names start plummeting down and they just sat there and held long, their jobs are at risk. If they decided to hold these FANG names and load up in the VXX, their jobs are safe. So don't confuse what's happening in the market with job preservation. And if you want to give me an intelligent argument and why people are shocked, like, some of these people, wow, that was a really good analysis on Apple for the past, week and a half, Mark. It went lower, and it's just such a great company, and they make all these billions. And I'm like, yes, I love Apple products. I own an Apple iPhone. I own an iPad. Why is an Apple a $400 stock or $500? Since we're making up numbers anyway. You can't just say because a company is solid, because they're still making tons of money, that they're worth infinite amount of dollars. That is never a good argument. And guess what? Why am I bringing this up so adamantly? Because there was a time when I was a trader. Been trading since 99, but there was a time called 2007. And everything started plummeting, and oil started shooting up, and every one of these analysts saw their favorite names go down 20%, and another 20%, and another 20%, and they just didn't know what the heck to do. They didn't understand. They were like, these companies are making money, I don't get why they're falling. Because the market has ebb and flows. We're gonna have another bear market. Are you really that delusional to think that we'll never have a bear market again? We're gonna have another tremendously bull market from this point forward. And you have to accept that as a fact. Now, I gave my 9-year theory. I talked about my 2018 report. I told you guys that this year, and I released this on the last day of December of last year in 2017. This year we're going to close lower than where we open. And I told you we're going to go up in January too. I think we still might even digest up or digest sideways in February. I don't think February is going to maybe be that bad. We might pull in a little, but I don't think it's going to be that bad. But March, April, May of this year, one of those months, you're going to be like, oh my God, everything is just selling off. And that's the point where you're going to have to stop and say, I'm going to wait for the next small bounce to short the market. That's what I'm going to be saying. So don't become delusional because your affinity to these companies based on their products are making you want to hold them. That's my 2 cents on it. So the markets are gapping down after hours. You're walking into a gap up tomorrow, gap down tomorrow, most likely, short of something absolutely miraculous here, holding overnight. I didn't get a chance to finish the Forex names. I'm going to be doing that a little later. Super Bowl definitely drained a lot of my time there. But I do have the cheat sheet for you guys to basically show what I'm watching. And you can see very simply, I have names like Impinj, ACET in Google, and they're just bearish setups. There are no bullish setups here for tomorrow. And I think we should really just look at some of these things bearishly, like Impinj basically closed right near the lows. Look for this stock to plummet through $12 tomorrow. I also gave you this one, Aceto Corporation. It's a specialty / generic drug maker. And taking a look at this one, this one could potentially fall down. Look for a break of Lucky Sevens, that's $7.77. This one could break down, and I even gave you another name like Google, because there is no reason on earth that Google's not going to plummet through $1,100. What do I mean by plummet? And we're talking about GOOG without the L in this one example. They're both the same name if you want to short one or the other, in my opinion. But 1086.22 is support tomorrow. So there's no reason why Google can't drop 25 points tomorrow. Quite the insinuation, right? Maybe even more. Who knows? Throughout the week, right? So keep an eye on the market. I think this is, I just want to share what I think will happen in a more descriptive manner is basically if we go down and then up, like I'm predicting for the middle of the week, you're going to have 2 opportunities. You're going to try to be part of that bounce where we start going up, or you can just simply wait on the sidelines, do nothing when some of these names are bouncing a little, and then just look to short them. Or you can try to do both if you want to be Superman. Don't feel obligated to do both. Do what you're comfortable with. Most traders, if you didn't know, it should be obvious, the majority of traders are comfortable going long. That's what they like doing. They're comfortable going long. They like buying stocks. You want to be part of that move? Fine. Me, I'm not sure. I might do a combination of both. I might do one or the other. It depends how the market sets up. You know, this is what I'm looking to do in the market next week. I was calling for this bearishness to come for a while. I explained my stance on Apple. Like for me, I was holding an Apple call spread before they reported earnings, like a couple days before, and I got rid of it for a small loss because I just felt that these Apple calls weren't going to be worth it. Did I buy puts and could have made money on them? No, I didn't even do that. So you don't have to, because you think the market's going down, doesn't mean you have to short here. In fact, I approach it quite the contrary. If you think the market's going down, usually the best thing you could wait is for the next up move. Same thing when the market's going up. The best way to buy a stock is when it's going down to your major support levels. That will produce the highest form of consistency available. And you know how I know that? How do I know that? I mean, it sounds nice, but how do I really know? How do you know that buying stocks when they go down a lot produces higher consistent returns than buying a strong name that day highs to go higher and higher and higher? How do I know that? Because algorithms and black boxes are the most consistent things on the planet. And the most consistent algorithms in existence are ones that buy on pullbacks and ones that sell or short on pop-ups. That's how I know. So really, I'm just trying to exude the same mentality of the most consistent robotic traders in the world and trying to just apply that same psychological mentality into us mere mortal humans. So be very careful tomorrow. Don't feel like you have to make a lot of trades. In fact, I would be comfortable. You want to do like a few scalp trades here and there, a couple intraday trades, or nothing. You want to sit on your hands tomorrow? I think that's a fine decision. Do not be Rambo tomorrow, whatever you do. All right. Moving on along. All right, we have we went through our game plan cheat sheet. We are going to go into our question and answer where I offer levels for any stock that you might be watching, any stock that you're interested in trading, any stock that you're swinging. I give levels in which I would buy it or I would sell it or what I would do if I was in your situation. Of course, I can never tell you what to do because that would be obviously illegal considering I'm not an investment advisor and I don't offer stock picks. But I do offer what I would potentially do if I were in your situation. That tends to help a lot of traders, see what they have to do. And we're going to get into that question and answer part right now. But to be part of that question and answer part, you must be a member of the Newsbeat Live service. We are the fastest growing trading community in the nation. Happy trading, make money. And we'll see you guys tomorrow morning on the Newsbeat Live trading broadcast. Have a wonderful evening.